What's up, guys? This is Manoj Choprani. I welcome you all on behalf of the Edupedia world. So, guys, it's a beautiful day outside, and I'm sure you guys are loving it. And certainly, you guys are honoring your word of making regular revisions time and again. Revision is the key to succeed in CA Final. Remember that, guys. So, this is the 5th video presentation. I'll be discussing a few more topics relating to capital markets. In my last 4 presentations, I have covered many of the topics relating to the chapter capital markets, and in this, I'll be taking off some more. So, just like the previous one, fasten up your seatbelts. We are about to take off with this presentation. The first topic of my presentation would be delisting of shares. So, we have actually talked about many of the things relating to listing of shares. Okay, IPO has to be released, this is to be done, that has to be done. Okay, now what if the scenario comes into the picture where we have to delist our shares? So what does delisting particularly means? So delisting of shares means that a company's whose shares were traded till now ceases from trading. Now no more trading for those kind of companies. So that's how delisting of share means. Next, as per the SEBI guidelines, shares can get delisted if the public holding dips below 10% or less of the voting capital of the company. In case the company is having like the public holding in the company, free float, market capitalization goes below 10%, then in that case, ceasing of trading can be happening over there. So shares might get delisted in such case of scenarios. Situations where this can actually happen. So what are those situations where that can happen? So number 1, that is when a substantial acquisition of shares by the acquirer takes place and an exit offer made wherein the public holding dips below the requisite levels. So a substantial acquisition of shares by the acquirer takes place and an exit offer is made to the public. So in that case, definitely the free float market capitalization will take a dip, and in such cases there could be chances that the delisting of shares can happen. Next comes companies get merged or acquired, resulting in compulsory delisting enforced by the stock exchange. So there might be a chance that the 2 companies have actually merged, or one company has acquired another. So in that case there will be a compulsory delisting for the company that has merged with the same, because now the existence would be in no more reality, and certainly there might be a chance that the delisting may be enforced by the stock exchange in such scenarios. Next comes when shares do not trade continuously for long periods on stock exchange. There might be chances that a company is frequently incurring losses, and there might be chances that there is a circuit which has been marked on this trading of those securities. So in such cases where the shares do not trade continuously for a long period of time on the stock exchange, there might be chances that SEBI may delist those shares from the stock exchange because they are already undervaluing and definitely they are actually incurring much of the losses. So that happens usually with the penny stocks which are trading less than ₹10 in such cases. Next comes that a stock may compulsorily delist the shares from a listed company under certain circumstances. In such a cases, there is no provision for an easy exit route for the shareholders, except that the stock exchanges would allow trading in the securities under the permitted category for a period of 1 year after delisting. So that's usually the only kind of remedy that is available with the stock exchanges. So in such a case, the stock exchange may compulsorily delist the shares of a listed company under certain circumstances. It might be possible actually. So certainly SEBI is having that kind of power to delist any kind of company if the following situations happen. So that's how delisting of shares particularly happening in case the main and the primary reason could be the lack of public holding in terms of like below 10% of the total voting capital of the company. So in such a cases, the free float market capitalization, that is apart from permanent promoter holding, will be less than 10% of the capital. So that's how delisting of shares actually happen, guys. So now let's move on to our next topic, and that is stock lending. So what does stock lending basically mean? So guys, the stock lending scheme was basically introduced by SEBI. So SEBI basically introduced the stock lending and borrowing scheme. The same has been mentioned over here. As per this scheme, those persons having the securities can lend their securities for consideration, and those requiring the securities can borrow the same. So that's how this stock lending process goes. It's similar to kind of a loan. If a person is having money, he can provide those money in the form of loan to another person who is actually requiring the same. Same is the case with securities as well. Those persons having the securities can lend those securities for consideration, and those requiring those securities can easily borrow the same. Under this scenario, the securities are lent through intermediaries who are approved by SEBI. The approved intermediary would borrow the securities for further lending to borrowers. Lenders and borrowers further enter into a separate agreement with the approved intermediary. And finally, the lending and the borrowing is effected through the depository system. So guys, this is how the procedure of stock lending basically prevails and goes forward. So that's how it is actually taken care of. So usually the transactions involving the lending and the borrowing of securities were executed through approved intermediaries duly registered by SEBI under the Securities Lending Scheme 1997. Such an intermediary may deal in the depository system only through a special account known as the intermediary account, opened with the depository participant. An intermediary account may be opened with the depository participant only after the intermediary has obtained the SEBI approval and registered itself with SEBI under the Securities Lending Scheme. The intermediary has also required to obtain the approval from NSDL. So guys, that was all about the process relating to stock lending, how the same can be done and why it is usually happening around. So in case of borrowing and selling of those securities, the same can be easily approved. So that's how it works. I guess you guys actually got the complete clarity with relating to this topic. Now let's move to our next topic, and that is the hot topic of the day, and that is insider trading. So what does an insider trading means? Insider trading is basically the buying or the selling of securities of a listed company by a related person who has the knowledge of material inside information which is generally not available to the public. So in such a case, who can be the person to be said a related person? Who is the related person over? It could be a director, it could be a member of the management, it could be an employee, it could be any other person such as internal or statutory auditor, agent, advisor, analyst, consultant, and so on. Those persons could be the related persons in those scenarios. So insider trading is an extremely heinous crime nowadays and extremely punishable with a lot amount of fine and a lot amount of imprisonment which one has to serve. So insider trading means buying or selling of those securities of a listed company with the kind of material inside information as to what is going on in the company, and such information is currently not available to the general public. So let's suppose if a fraud is going on in the company and you are aware of it, you being the director, you are holding some of the shares of that company, and you think about, okay, this company the fraud is already going on in this company, it's better to quit the market now, ASAP. And if in that case you basically have this kind of knowledge regarding the inside information and you just leak that information to some other person, then in that case the case of insider trading will prevail, and certainly that is punishable. So you can't do such act. Get that straight, period. So insider trading is an illegal, unethical and a punishable practice. Insider trading harms the interest of the company's stakeholders. Penalty which is involved in insider trading is the penalty of rupees 25 crores or 3 times the gain made, whichever is higher. And the imprisonment involved in insider trading would be the minimum of 6 months, the maximum of 5 years. That's in India. If you'll be talking about like US based laws, then in such case, the maximum years of imprisonment can even go for 20 years, not just 5. So in that case, let's discuss some of the irregularities which are being involved in this hot topic in a bit more detail. So we can say that the dealing which is being made by the insider is illegal, as it is done to provide at the expense of non-availability of such information to the general public. So that has been mentioned, right? Apart from that, I can easily say that the word insider has a very wide connotation. Insider trading is an unethical and a punishable practice. This is resorted to by those in power of corporates and harm the common interest. As an example, I can say that if a company's insiders have the knowledge that the company is more likely to lose like any kind of suit in the court involving permission on the sale of a product amounting to billions of dollars overseas, and they sell those shares much ahead of the general public, we can say that they have resorted to insider trading. By not selling the shares on time, the common public would sell them at a much lower prices later on when such negative verdict is made by the court. So this is the kind of market inefficiency which goes on, and that's how the cases of insider trading comes into the picture. So there has been a very famous case which has actually been made that Mr. Rajat Gupta. I hope you guys must be aware of him. Okay, if not, certainly I'll discuss this case with you. Rajat Gupta, he was the Goldman Sachs ex-director. He has been found guilty of passing the confidential market information to Galleon hedge fund founder Rajaratnam in one of the America's biggest insider trading cases. So he has been like one of the most successful Indian Americans on the Wall Street, Mr. Rajat Gupta, and he was found guilty of passing off that information. So a Manhattan court held Mr. Rajat Gupta guilty of providing such insider information to his former friend, Mr. Rajaratnam, and finally sentenced him to an imprisonment of 11 years. I have already discussed with you in case of US laws, they are actually very much stringent, and one has to deal with those laws very strictly and in a very disciplined manner. So here it's like almost 11 years he has been sent in insider trading cases, and he was found guilty on 4 counts out of the 6 charges. And it has been like very unfortunate for him because he has been charged over that he got guilty of this kind of insider trading case, and he is the same person who is the co-founder of Indian School of Business in Hyderabad. So he is a pretty big kind of eminent personality before getting involved in this trading case, and in fact even after. Eminence doesn't have to deal with good or bad, but yes, now he's nowhere into the good books of any kind of trading sector, and that certainly he has to vouch out for that as well. So beside handling out his tenure at the Goldman Sachs and McKinsey, this person, Mr. Gupta, also served on the boards of the Rockefeller Foundation and plus Bill and Melinda Gates Foundation as well. So he was a big time honcho earlier, but now he has been serving the jail imprisonment currently in US. So that's a kind of unfortunate case. So that's how the overall insider trading works, and I recently shared with you an example that was best appropriate for this kind of situation. So always try not to get indulged in any kind of information with relating to insider trading. If you have any kind of CA friend, and if the same is like auditing any of the limited companies, listed companies, so don't try to involve yourself in any kind of share or stock trading for those kind of securities on which you are actually auditing. Plus, don't try to sell out those kind of information to any other person, which is confidential enough, because the same is not available to the general public. That could actually harm your career in that way. So one has to take cautious steps while dealing with insider trading cases. So that's how insider trading actually works. I guess I was able to deliver that perfectly to the guys. So just ensure, keep revising those topics time and again for that matter. Let's move to our next topic, and that will be small cap, large cap, mid cap, and penny stocks. So we regularly, day in, day out, deal out with various securities available in the market. So how these are being distinguished into layers. So how a person can easily judge, okay, this is a good large cap share, okay, this is some share which is involving smaller amount of capitalization. So how that can be done? So we'll just discuss this with you in this slide of the presentation. So let's start with small cap companies. Small cap companies are the companies which are having a market capitalization significantly less, let's say less than 10 crores. These basically, okay, 100 crores, that will be good. So market capitalization less than 100 crores in such cases. These companies are lesser known companies. Maybe I can say that these companies are tomorrow's mid-capital companies. Entrepreneurial startups are usually prevailing in these kind of small cap companies. Also recorded the examples for you which are currently trading in the market. So 3i Infotech Limited is one of the small cap companies. Aadhar Ventures Limited is another small cap company. Apart from that, there is one Excel Frontline. The same, all these three companies are relating to the list of small cap companies. Mid cap companies. Mid cap companies are those companies who are having a market capitalization generally less than 2,500 crores. These are some of the most successful small cap companies who are less successful large cap companies. They are having the smaller base. Hence, rapid growth is actually visible in these kind of shares. Quotes are much at the lower valuation than large caps and these market capitalizations quotes are actually less volatile than the small caps. So that's the good thing about them. These are actually better than small caps. However, having said that, they are still on the verge of becoming large cap companies. So I have noted the examples for seeing. Syntex Industries is one of those examples. Biocon is there and DCB Bank is there. So all these companies are involved in the list of mid-cap companies as far as their present is concerned. Next comes into the picture, that is large cap companies. So those are the big honchos, big giants in the market. So market capitalization with a base of greater than 2,500 crores is leading towards large cap companies. They are the leaders in their segments of business. These are the persons who are the industry giants, successful firms, and most of them are known worldwide, not just India. They trade at a sufficient high, huge amount of volumes, and their valuation is the benchmark for other stocks. So the major indices are usually comprised of large caps. So whether it's National Stock Exchange, whether it's Bombay Stock Exchange, all of them are actually bowing to those kind of large cap companies. So for example, ACC Limited is one of that. That's a cement based company. We have Asian Paints, we have Ashok Leyland, we have Bajaj Auto, we have Bank of Baroda. So all these companies belong to the premier top tier kind of group, which is large cap companies. And the last one is penny stocks. So now these are the stocks which are actually having the market capitalization of let's say pretty significantly less than like 10 crores. These companies are mostly unknown to the investors. They trade at a very low value, usually below par value, like maybe less, even at less than rupees 10. So they are usually actively traded within a small group of investors. Many people don't know about these kind of securities, and it is always risky to invest in these kind of penny stocks because you never know whether you'll be able to extract out best kind of returns in these while investing in these penny stocks or not. So it's always recommended to go for mid caps or large caps. Small caps do allow you to go for a greater potential, but still there are chances of like a less amount of liquidity, and there are chances that you won't be able to extract your best kind of return with small cap or penny stocks. So it is always better to go with mid caps and large caps. So the examples of penny stocks would be Manali Petrochemical plus Lycos Internet. So these kind of securities are available which are trading at penny stocks. Lanco Infratech is also an example for penny stocks. So that's how that goes on. That's how the market is divided into 4 different layers of companies and segments. So whenever the next time you start investing, definitely think about these kind of different caps while investing, so as to ensure that you get the desired requisite return which you have already dreamed of. I'll be concluding my video with a dose of motivation, and that would be always do your best. What you plant today, you will harvest later. This quote was made by Mr. Og Mendino. So he has actually quoted out in the best of the manner. So whatever you're doing, just do it in the best possible manner. Don't think about of like doing it in a mediocre way or average kind of stuff or quality. Always perform any kind of task which you do with utmost satisfaction, with top kind of quality that you can render while delivering that service. So always do your best. Whatever you are planting it now, you'll be able to harvest it later on. So whatever you are, the kind of hard work which you are doing currently, guys, I salute you for that hard work. So being getting involved in any kind of studies relating to CA final examinations, it's not an easy task, I know that. So whatever you are doing, I just salute you for that. I respect you. Certainly, don't fear that way. Just take the plunge. Make your studies in a best possible manner with a qualitative one, and certainly you'll be able to harvest the benefits of the same by becoming a chartered accountant later on, and that too with flying colors. I'll be seeing you for that matter. Right, guys? Perfect. Thank you on behalf of the Edupedia world. Keep interacting, stay connected. We'd love to hear from you via your questions and queries in comment boxes. That will help us to know your needs better. Thank you so much, guys. Love you all. Bye. Take care. We'll be seeing you in our next presentation.